Why does inflation rise even when global trends are falling? Breaking news in the world of economics. Many people are asking why inflation continues to rise even as global trends seem to be declining. If you are curious about this pressing issue, you are in the right place. Let's break down the factors that contribute to this phenomenon. First, we must consider tariff policies. When countries impose tariffs on imports, it can lead to increased costs for consumers. For example, a 10% tariff on United States imports could raise annual headline inflation by between 0.5 and 1 percentage point. If tariffs rise further, such as a potential 15% rate, inflation could increase by as much as 1.5 percentage points. Next, geopolitical factors play a significant role. Tensions in regions like the Middle East can impact energy prices. Recently, the ongoing conflict in the Middle East has raised the lower price boundary for oil. This situation could keep inflation elevated into the second half of 2025. Government interventions also affect inflation. In some countries, measures to control prices may provide temporary relief. However, these interventions can lead to future price increases if not addressed properly. For instance, Hungary's inflation remains high despite price controls, with forecasts suggesting it could rise to around 5% by the fourth quarter of this year. Monetary policy is another critical factor. Central banks make decisions regarding interest rates and money supply that can influence inflation. Even if global trends indicate a slowdown, localized monetary policies can still lead to rising inflation if they are expansionary. Supply chain disruptions are also a key contributor. Events such as natural disasters or logistical issues can create shortages, which in turn lead to higher prices. Recently, drought and severe storms in Hungary are expected to cause processed food prices to rise significantly. In summary, inflation can rise despite falling global trends due to tariffs, geopolitical tensions, government interventions, monetary policy, and supply chain disruptions. Each of these factors plays a role in shaping the current economic landscape. Stay tuned as we continue to monitor these developments and their impact on inflation rates.